Yo, welcome back to the Money Matters podcast. I am your host, Jack, and this, my dear friends, ladies and gentlemen, this is a Mailbag Monday. Mailbag Monday every Monday, 6 p.m. Eastern, 5 p.m. Central, 3 p.m. Pacific. You get access to my brain and whatever weird, crazy, funky rants I'm going to go on, likely related to macroeconomics and thy orange coin, Bitcoin, the money of the internet. Look at that. I'm getting much better at this podcasting thing, aren't I? I'm dialing in and yelling at my computer alone in a giant empty closet at just past 6 p.m. Eastern. It is 6:04 Eastern, Monday, April 14th, or in a far better clock and keepage of time, it is Bitcoin block height 892,451. The Bitcoin price is currently 84,590 US dollars. That puts the total market cap of Bitcoin at 1.68 trillion. For those listening, you don't see the scruff that I'm working on. Ladies, we're going to have to keep it together this episode because I have a beard. I'm feeling good. Bitcoin's feeling good. It is up on the day and over the weekend, and we're going to talk about all of it. A lot going on. Trump is renacking and then reacting and renacking tariffs. China did not back down. Markets are moving every which way. And I'm going to break it all down. So here's how it works per usual. I'm going to hop into the topic that is top of mind for me, which is very simply macroeconomics, U.S. policy, the tariffs, and how the White House in Washington, D.C. has been navigating market events. After that, I'll do some Q&A. I got just about an hour for you all. So about top of the hour, I'll be out of this jam to work on other Bitcoin stuff. But with that, we will get started. There's no ads on this show. If you ever want to support me, you guys can subscribe to the podcast on YouTube, and you can use Strike. Buy your Bitcoin on Strike. Make your Bitcoin payments on Strike. Some of you may have access to get a Bitcoin loan, collateralized loan on Strike. So if you ever want to support me, you can be a customer in my business. And if you ever want to support this podcast, we hit 22,000 YouTube subscribers. My goal was always 100,000 this year. I don't know if that's too ambitious or not. Only one way to find out. But we're making really good progress. You guys have been so supportive. I am so appreciative of that. I really, really enjoy hanging out with you guys every Monday. It's a blast. So anyway, everyone said I'm lagging. Let me know if there's audio issues, if I'm lagging. Comments on my hair, that I can't solve right now. Audio lag, I could probably solve. My hair, I don't know if I can solve that, at least not this very second. All right, on to the things that matters. Let's talk about current policy from the United States. Listen, I think, there's a lot of, the U.S. got them where they want them. They got China to back into a corner by themselves. And right when China thought they were fighting back, the U.S. delayed tariffs 90 days, got China where they want them. I don't believe that. I don't believe that for a second. I mean, listen, I think the U.S. panicked a little bit, because, guys, dollar down, stocks down, or dollar up, stocks down, 10-year up. Problem, huge problem. I mean, I think that the instability of the bond market is, and of the treasury, it's a huge, huge, huge problem. And I think that the U.S. chickened out and backed out because they realized they don't necessarily have the upper hand. Just for context and to be clear, what is the relationship all about? For many of years, the United States has printed dollars and exchange them for real stuff that they need. We need food, energy, we need our phones produced, we need our clothes produced, we need oil, energy, raw materials to build things. And we've imported real stuff that we need to live our lives, and we've exported dollars, which is just printed currency that we debase and can make at will. That's not a very scalable and reliable relationship for anyone. Why would you, if you were making food, if you were making oil, if you're making iPhones or Nike shoes or anything, why the hell would you accept something that another man can print out of thin air for real stuff that you can't print yourself? It was never really a sustainable thing. And the world is starting to unwind from that. The reason the US is focusing on ourselves and saying we need to start producing stuff here and we need to focus and putting ourselves first is because we cannot continue to be reliant on the world making stuff for us when we're only giving them printed pieces of paper in return. In fact, it's becoming a national security threat. Our weapons even are reliant, like the supply chain of our weapons and ability to protect ourselves is even reliant on countries that we aren't sure have our best interest and are going to protect us if we need protection or if we need weapons. I mean, you can make an argument that the proxy war fought between the US and Russia in Ukraine, we lost because we weren't able to produce enough stuff in a timely manner. So that's the context. And China really wasn't going to budge. They were retaliating every single time Trump retaliated. They retaliated and they said, we produce stuff. You don't. What are you going to do about it? Like, we believe that those that can actually produce real things that people consume are the winners. So we are willing to hold our ground, sell our treasuries, and buy gold and call your bluff. And that really, in my humble opinion, is what we saw go down over the last week. And I think the US flinched. I mean, Bessent has said he's been focusing on the 10-year treasury. This was not the plan. The plan wasn't stock market down 20%, assets down, 10-year up. That was not the plan. The plan was hopefully the Fed can cut. Hopefully the 10-year comes down. They've got $10 trillion worth of debt that they got to refinance. And if you can get the cost of that capital down, if you got a $10 trillion bill that you got to work on, boy, would it be nice if you had lower cost to refinance it. So the goal was, we're going to be stiff, we're going to be firm, we're going to be focusing on Main Street and not Wall Street, yada, yada, blah, 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 blah. And we're going to get the 10-year down. We're going to refinance our debt. We're going to build from there. Okay, well, that didn't go too well, did it? Because stock market down 20%, but the 10-year up. 10-year up. What does that mean? If the 10 years up, guys, just bond math, we go up when like the actual bond goes down. So the more people sell these things, the more the rate goes up. Okay, that's how it works. It's inverse. So if everyone is interested in lending to the US government for 10 years, then the rate is going to come down. If everyone's like, I'll give the US government money, they're so responsible, they're so fast growing, they're so amazing, I'm not worried about their debt, they're the best, then 10-year yields is going to come down. If everyone's like, get me out, I don't know how the heck they are so indebted and just drowning in debt. And it's unclear how strong the dollar is going to be. It's unclear the future of monetary order. I don't want to lend to the US for 10 years. No chance. Get me out. Then the 10-year is going to go up. And so with the 10-year going up, that's a huge problem. Usually what the administration thought was going to happen is when stocks go down, people exit what they call risk and they find a flight to safety. Flight to safety used to be treasuries, okay? Used to be We go to where there is a return without any risk, right? Without any risk. Let's say the 10-year returns you 5%. The S&P on average return you 14%. So if risk is on, I'm in the S&P because I'm getting a higher number. If risk is off and I have to find a return where I don't want any risk, there could be a war, there could be COVID, there could be trade wars. If I don't want risk, usually the flight to safety are treasuries. But seeing that go up while stocks go down means people are fleeing treasuries and the stock market. Stocks down, 10-year up, gold up, huge problem. Let me try and unpack that for you guys. Stocks down, meaning, again, the US's new policy. I said this last episode. If you guys need a deeper dive into what I'm about to say, check out last episode. But the new US's new policy is take your money and get the hell out of here to foreigners, to China. Let's talk about China. Take your money, get out. Okay, but China's money is in the US stock market and in treasury market. The US operates in a trade deficit. China operates in a trade surplus. China takes any foreign trading partner, takes their trade surplus and invests it outside of their local economy. If you take your profits from trade and you invest it internally in your local economy, you're going to strengthen your currency, which weakens your exports. You want a weaker currency so that you have cheap labor and stronger exports. So when you have profits from trade, you have to push the money out elsewhere. So China takes profits and they dump it into the US stock market. They dump it into the US treasuries market. Okay? We're all following so far. The US is saying, take your money, get the hell out. Okay, but their money is in Meta, is in Google, is in Amazon, is in Nvidia. So why is the stock market absolutely tanking? Well, they're following what the US wants. Take your money, get the hell out. How was US exceptionalism funded over the years? Why is the US stock market always getting bid higher than any other market? Do we have better technology? Do we have better companies? Yeah, maybe you can make that argument. But more of the reality is because everyone else's trade surplus with the United States was being dumped into the S&P 500. That's why. What's the wealth gap? Where's the wealth gap come from? Well, if you're a successful tech founder, you get a permanent bid from China on your stock. That's where you're getting 50 times earnings. So the stock market is going through a reevaluation. It's getting demonetized, revalued. Why? Because you're not getting the surplus of global trade just unemotionally dumped into the S&P 500. So the stock market comes down. Now, when the stock market comes down, people fly to safety. That safety this time is gold. Again, usually in recent history, a flight to safety is lending money to the US government in the form of something like a 10-year, right? What is a 10-year? It's here. US, I will lend you my money. You will pay me with interest. Okay? People overcomplicate it. It's you're lending to the government's borrowing money from you, and they'll pay you back later. Okay. And you know it's risk free because they're paying you in dollars and they can print those things. So they can always make you whole on the interest that they owe. People aren't flying to that safety anymore. They're saying, screw that. The dollar, like these guys are a mess. They're indebted. The dollar is in trouble. We're out. So gold is catching that flight to safety. And soon Bitcoin will too. Okay. That's what's happening. So when Besant is saying, yeah, I'm focusing on the 10-year, I'm focusing on the 10-year, I'm focused on the 10-year. Well, bro, focus harder, my man, because you don't seem that focused, bro. Like the 10 years going the wrong way. You know, when a car's going down a one way, wrong way, turn around. People aren't, if your plan was to crash the stock market to get people to flight into the 10-year to bring it down, you made them flee into gold. Your treasury market is disorderly. The stock market's down 20% on the month. Everything is screaming like the end of the current monetary order, the end of this whole idea that the US is going to be able to print a green piece of paper out of thin air and exchange it for real goods and services. We have to go back to a neutral reserve currency where we're settling global trade in something like gold and something like Bitcoin. Everyone is dumping their treasuries. Everyone's dumping their US stocks. I think the idea of US exceptionalism, like all you have to be is in the S&P 500 and you just go up forever, that's going to change, guys. Why would I pay 50 times earnings for Meta, for Amazon, for Google if China's not taking their trade surplus and just plowing it into all these things? Why would I overpay for a company like that? So, what do I think is happening? The US got caught in a pickle. The notion that the US has all this leverage, we'll see. We'll see. But what I think is going to happen is neutral reserve assets are going to explode in demand. Scarce neutral reserve assets, gold, Bitcoin. Gold, we're already seeing it. Why is Bitcoin trading like beta NASDAQ? People say Bitcoin just correlated to the stock market. It's not a neutral reserve asset. Okay, but what I think has actually been happening and will happen is the stock market and Bitcoin were expressions of fiat debasement. They were correlated with fiat liquidity. Okay, meaning when governments around the world were printing money or having trade surplus, the stock market and Bitcoin got the bid. Okay, is this making sense? So the reason they were so correlated is not because Bitcoin has earnings and trades like a company. It doesn't. In fact, it's a better version of gold. They don't trade similarly, or their correlations aren't so high because they have similar properties, because they have similar value in a portfolio. They trade similarly because they are both smoke alarms for fiat liquidity, for currency debasement. But the stock market is very quickly not becoming that, because they're not catching the permanent bid from excess trade flows. They're not getting the permanent bid from surplus from countries like China. Bitcoin is and will. So I see them decoupling, because I like the NASDAQ. I would not be very long the NASDAQ, because how are you going to replace the flow of capital that is China? That's a lot of money that you're going to have to find a lot of new buyers. That's not going to take a Robinhood Reddit thread to replace China buying the equities in your portfolio. If the new monetary order in alignment around the world is take your money, go home, our country first. We have to focus on local production. We have to focus on manufacturing. We have to make America great again. Then your equity isn't trading at 50 times earnings. It's just not. Bitcoin will still catch that bid, though. Because in this world, what do you want to own? You don't want to own some tech company trading 50 times multiple. You want to own a scarce asset. Because, guys, here's the game. The game is focusing on my country first, saying we're going to focus on manufacturing. We're going to focus on building real things and exporting them. That's really inflationary, because the only way you can be competitive in producing stuff and selling it is if your currency is weak, if you can afford cheap labor. Guys, think of it this way. How the hell is the United States going to afford to build factories, to localize production of stuff? They're going to have to print the money. They're going to have to print the money. And whether that looks like yield curve control, whether that looks like stimmy checks, if Trump comes out and says, hey, we need 2 million factory workers in the next 24 months. And so the first million that enroll get free tuition, they get guaranteed salary, and they get housing in Texas. That's printed money. They're going to have to print it. So if the game is every fiat currency is going to get weaker, there's going to be more fiat currency units that exist in the world, then the game is not necessarily pick the right tech stock anymore. That's been the game because everyone's trade surplus gets plowed into the United States. And the way the media pitches it to you is this is US exceptionalism. The US is just so exceptional at everything. Not really. US exceptionalism has been funded by foreigners' trade surpluses. That's the truth of the matter. I'm American. I'm not trying to get religious or political or any of that stuff. I'm American. If anything, I'm talking against my own, like, I'm just calling it how it is. You guys can always count on me to just say the truth. And when I'm wrong, I'll put my hand up and I'll admit it. But I'll always seek truth. And the truth, as far as I can see, is that American exceptionalism, a lot of it is funded by foreigners buying all of our, they're just taking the trade surplus and plowing it into our market. And so when Trump says, we're not your piggy bank, take your money and get out of here, we have to start focusing on us. You guys are driving a wealth gap in our country. Think about the wealth gap in America, guys. Think about assets. Like, countries like China buy up all the real estate in America, buy up all the stocks in America. They're plowing the price higher. So the wealth gap, meaning like the top 5% in America own 90% of the assets. That's because if you're an asset owner, then China just plows up the prices of your assets and you get rich for doing fuck all, for doing nothing. And if you're living paycheck to paycheck, China's making these assets unaffordable to you because they're just taking their surplus and plowing it into these markets. And so if Trump is saying, half my voter base, they don't have college degrees, they don't have assets, and fixing America is about making everything equitable and accessible to everyone. China, take your money and get the hell out of here. The stock market is not a savings account anymore. All of a sudden, the stock market are just companies that could work or could not. They don't need to be trading at 50 times multiples. We don't need to praise them like the Messiah, like, oh my God, American exceptionalism. All you guys are so smart. You're like wizards. You're like geniuses. No, they're human beings running a business. What are you investing in when you invest in a company? Future cash flows, a leadership team, a product that could or could not change the world, whatever, who cares? But like, what's the focus now? The focus is on, okay, game on. Everyone's going to be printing money. Everyone's going to race to weaken their currency. Putting your country first, saying we're focusing on us, is highly inflationary because you have to print the money to debase the currency, make labor affordable. And like, it's just that. So why is gold going up and the stock market going down and bonds being sold off, which is driving the 10-year up? Because lending money to the United States is no longer a flight to safety. The stock market is being revalued and demonetized. Scarce assets win. Scarce assets win. The market just hasn't understood Bitcoin yet. It hasn't decoupled. This is why my prediction this year is Bitcoin decouples from its very tight correlation to the stock market this year, because I believe the stock market is going to get revalued and Bitcoin is going to trade much more like gold, because all the unit of each fiat currency is going to explode up. There's going to be a lot of money printing, not just in the United States. I know we listen to a lot of what the Fed says and what Besson says, and we have to, because it's the most important economy and most important central bank and most important fiat currency. But the reality of the game is, guys, if the U.S. is starting to devalue the dollar, then everyone else around the world has to devalue their currencies and keep printing, because it's a game of who has the weakest currency, who has the strongest manufacturing production, who has the strongest exports. And so there's going to be money printing everywhere. It's a money printing competition. And that's why gold, all of a sudden, gold is like kicking the S&P 500's butt. This time last year, the S&P 500 mocked and laughed at gold. You look like a clown owning gold. That changed that quickly. And I'm just trying to break it down and humanize it and explain it to you guys. Bitcoin's going to be much more like gold, and then it will outperform gold, because the reason Bitcoin will outperform gold is it's harder than gold. And harder is in reference to how hard is it to produce more units. Okay. Bitcoin, it's impossible to produce more units. Gold, it's not impossible. The more gold goes up, the more gold we will find. Right now, it's uneconomical for Elon Musk to go to a planet in outer space and find a bunch of gold. It would cost him too much to do that versus what he would get in return based on what gold is worth. If gold keeps going up, us humans are going to find a lot more of it. If Bitcoin keeps going up, Us humans can't make any more of it. We can't. It's the only thing where no matter the amount of demand, we can't change the supply. We can't find it in the ground. We can't find it in Mars. We can't produce it in a factory. There's 21 million. That's it. And so Bitcoin will decouple from the stock market. It will start trading like gold. It will outperform gold. And then the question will be, if we need to start to settle and denominate in world reserve assets, who's going to want to use gold? Who's going to want to use Bitcoin? And I think initially, like central banks already own gold. There was a period in human history where we used gold, but Bitcoin is a better product. It's more divisible. It's more portable. It's easier to transfer. It's cheaper to use. It's more private. It's all the things that and it's most importantly, it's harder. It's scarcer. So that's my rant, is that this idea that the US like caught China where they wanted them. Really? Where? How? I don't see it. Stock market down, 10-year up. Who caught who? What? Like, how short term are people's memories? The White House said over and over and over and over again, we're focusing on the 10-year. We're focusing on the 10-year. You're focused on the 10-year. Okay, cool. Well, the stock market's down 20%, the 10 years up. How's that focus? And I'm supposed to sit here and believe like, no, that's all part of the plan. Okay, I guess. I don't know. If I'm wrong, I'm wrong. I call it how I see it, man. I think the world needs more of that. And so anyways, what do I think is going to happen? Guys, the Fed came out and said effectively, here, let me pull it up. Hold on. And for those listening, I excuse the slight delay. I will fill your ears with words to hold you over while I pull up what I want to pull up, because the Federal Reserve did issue, April 11th, which was a Friday, top Fed official says the Federal Reserve is ready to help stabilize the market if needed. What does that mean? That means we will print the money, buy everything. They won't let things go down. You are safe buying and owning risk because the Fed will bail you out. Another one, Jamie Dimon. JP Morgan Chase and co-CEO Jamie Dimon expects a, quote, kerfuffle, end quote, in the U.S. Treasury market. Yeah, well, thanks for stating the obvious, Captain. That will prompt a Federal Reserve intervention. Dimon attributes the expected turmoil to all the rules and regulations and believes the Fed will step in only when they start to panic a little bit. Dimon advocates for bank rule changes, including exempting treasuries from the supplemental leverage ratio. Guys, listeners of the Money Matters podcast, listeners of Mailbag Monday have heard me for weeks say they're going to change this rule, the SLR, allowing banks to buy an unlimited amount of treasuries without posting collateral, because the treasury market, they're going to need unlimited buyers for treasuries, because treasuries are not a flight to safety anymore. The stock market's going to go down. The 10-year is going to go up. Problem, mayhem, alert, alert, danger, danger, danger. And how cool is it at the Money Matters podcast that we're reading all the things we've been talking about over the last 4 weeks? Dimon advocates for bank rule changes. Boom, we were right, including exempting treasuries from the supplementary leverage ratio to avoid a repeat of the 2020 treasury market seizure and to allow banks to become more active intermediaries in markets. Okay, so between the Fed and the U.S. banking system, we're about to print a bunch of money. So what do I think is going to happen? I think Bitcoin's going to explode. That's what I think is going to happen. Just straight simple. It's simple. Bitcoin is technology plus fiat liquidity. More fiat currency units that exist, Bitcoin goes up the most. Okay? So the gig is up. The notion that like we have the upper hand in what? All we have is this green piece of paper that nobody cares about anymore. Nobody wants it anymore. That's what we have. We don't have anything else. We can't produce our own weapons. We can't produce our own food. We can't produce our own iPhones. We can't produce our own laptops. We can't produce our own clothes. We can't produce anything. That's why the focus. Listen, you can love or hate Trump. It doesn't matter. That's not what this podcast is about. The reason he wants focus to be on energy, he wants to drill, baby, drill. He wants to bring manufacturing back to this country. It's because it's very dangerous to not be able to sustain yourself and have to rely on other countries to live. We've gone too far. This whole idea that we can print money and just live outside of our means, not actually have to do the proof of work to afford the lifestyles we have, is garbage. It's over. It's dead. Finito. Poosh. We're going back to proof of work. We're going back to a system where it's neutral currency, accessible to all, biasing none. And it's all about proof of work. Proof of work. You cannot print it. You got to earn it. That's what I think is going to happen. So I think Bitcoin is going to the moon shortly. Destination moon. The Fed comes out and says, we'll print all the money necessary. Jamie Dimon comes out and says, change this rule, please, so I can buy unlimited treasuries. You guys understand, he's buying it on leverage. He's creating money out of thin air to prop up a market. Things are going nuclear. So that's what I think. That's my analysis over the last week. Stock market down, 10-year up. Whoops. Someone called the Fed, get them to issue a statement. Someone called Jamie Dimon, we're going to need his help. That's what happened. Stock market down 20%, 10-year up. Oops. 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 So much for focusing on the 10-year. Focus harder. So what? And you know what's crazy? Let me say this, and then we'll get to Q&A. Here's what's crazy. You know, there's some Bitcoiner sitting on a beach, not giving a crap about anything going on. Just getting some sun, going for a swim, eating food he likes, listening to some music. And I could be screaming and kicking and ranting about the Fed and this central bank and this trade surplus did this. And at the end of the day, all it results is people have to print money to solve their problems. And that Bitcoiner on the beach is yeah, I already knew that. You didn't have to kick and scream and yell at a computer in your empty closet every Monday. I know the end game is they have to print money, and all I have to do is stay humble, stack sats, and chill. Because really, this is a Bitcoin podcast. And at the end of the day, guys, I can try and make this as simple as possible. But the simplest way for me to tell you what's going on is everyone's got problems. The only solution for these governments is to print money. Bitcoin's going to go up. You know what I mean? Yeah, someone said Jack's describing himself in his free time. Yeah, I am. I mean, your Bitcoin thesis could be this simple. Printing money is the only solution. I'm going to own the scarcest thing I can. Boom. Go to the beach. That's it. If you want to listen to this podcast, I love the macroeconomics and making sense of the world. And, I want to develop my own opinions. I think, if we want to restore any sense of harmony to society, it's going to rest on the idea that personal responsibility is important again. I'm not going to delegate and outsource my diet. I'm not going to delegate and outsource my opinions. I'm not going to delegate and outsource my portfolio. The man that I want to be is I have my own opinions. I have my own thoughts. I have my own curiosities. I'm not afraid to be wrong. I have a willingness to be vulnerable in the pursuit of truth. And so that's why I try and follow my curiosities. I want to develop my own opinions. I want to engage with the free market and with the internet and with open conversation. But if you wanted to simplify it, the only solution is to print money. Bitcoin will go up. Close your laptop. The sun's warm somewhere. Find a beach. Okay. With all that being said, not much of an update outside of the fact that it looks like U.S. financial authorities are ready to step in. They've communicated that. That's why the stock market's up. That's why markets are up generally, is because Trump's shown a willingness to listen, shows he cares about markets, and the U.S. has made it very clear they're not going to let anything crash. They will print the money. Money will be printed. End of story. Will Bitcoin go up immediately? Am I saying it's going to go to $100,000 tomorrow? No, I'm not. things can be volatile. I'm a long-term guy, but I think a lot of what we've been talking about over the last few months on this podcast is playing out before our eyes. Like even a specific banking rule being changed. Like crazy. Okay, let's do some Q&A. Shall we? Let me pull it up. Shout out my team that's in the chat every week, that's writing your guys' questions down while I'm yelling at the computer. Much appreciated. Both myself and I'll speak on behalf of the audience. Really appreciates the fact that they can ask questions anytime. You guys can ask questions in the chat, and they'll be recorded in a document that I can go through at the end of the show. So shout out, Lavinia is her name. Unbelievable teammate. And we will get started here with some Q&A. Okay, first topic, macro. Will the debt crisis be solved? Default, tax up, cut spending, inflation, find idiots who buy U.S. treasuries, or a mix of some of them? I mean, in theory, the way to solve the debt crisis is through growth, right? So I love the metric debt to GDP, which is really tells me how much have we borrowed from our future. That's what I consider debt to be, is you've pulled your future forward and you've spent it today. Ideally, you pull your future forward and you spend it now, because you can enter your future with more than you would have. Like if you could spend the capital now and achieve some growth, then you'll enter the future in a better state than you would have. But at a debt to GDP of 130%, I don't know how good that is, right? Like that, what that tells me is we've spent a lot of our future and produced no growth to show for it. So that loss has to be realized. In theory, what we can do is cut a bunch of spending, make a bunch of revenue. Right now, a lot of our receipts, our revenue is like collecting capital gains, for example. So if we can impose tariffs, up the revenue, cut the spending, and then focus on growth. So why is this administration talking about deregulation? Like take the rules away from business builders, give them tax breaks, because they just want more growth. Like if you get out of AI and Bitcoin's way, can entrepreneurs like myself find more growth for this country? Hopefully. So the plan is focus on growth and focus on, cutting the spend. And so that's this combination of Doge, tariffs, deregulation. Will it be solved? Like your question, like, is that going to work? Probably not. I mean, I think we live in a reality where, again, I believe harmony can be restored when personal responsibility is valued again. We live in a society where politicians sell the fact that they can solve all your problems, and the people buy that. Like people like, I was catching up with some buddies this weekend that I went to high school with, and there are people out there that are like, man, I voted for Trump because the stock market was supposed to go up. Like I'm waiting for Trump to solve my problems. And that's just like a fundamental issue, I believe, in society. Like you need to own the outcomes of your own life. You are the only one truly responsible for your problems. And really, until we move on from a society where, the only way for government to attempt to solve your problems is just print money. And so I think society has this flaw. I think government's gotten too big. And it's till we can restore the idea that personal responsibility is the core identity of any man or woman, for that matter, speaking just more broadly, of any human, then, they're going to continue to print money. And politicians are going to continue to run on the idea that they're going to solve all your problems. And they're not, and they never have, and they never will. But what's their plan? Their plan is to drive higher growth, cut the spending, and, really it's that debt to GDP number. Can you get that down? Can the trajectory of where this is going be like eventually we'll outgrow the debt? Do you think the 10-year up and stocks down was a way to retaliate? It could have been. This question is implying that someone like China would sell their stocks and their treasuries, which, again, usually you're selling stocks to buy treasuries, or you're selling treasuries to buy stocks, not selling both. That's the problem. And that, really everyone's like, screw this, this US place, like it doesn't make sense anymore. That's what the market is basically saying. And again, like an American is afraid to say that out loud. I'm not afraid. That's just what the market was saying. And so the question is implying and inferring, did China basically try and cause this on purpose as a way to send a message? What's funny is so far, there's no proof that China was actually the bigger sellers in this market or sellers at all. From what people can tell, the treasury market's just thin, meaning there's not a lot of buyers anymore. Like central banks globally stopped buying in 2014, right? The reason Tether, for example, in stable coins is like such an interesting opportunity that the government wants to get to know is because they're buyers of, Tether's like one of the top, if not the top active buyers of treasuries. It's Tether and a bunch of hedge fund bros. So I think the market is just thin, and it could have been China, could not have been China. It actually doesn't matter. The message, whether it was sent by someone purposefully or not, is that the treasury market's thin. It's not a flight to safety anymore. U.S. exceptionalism was funded by foreigners, and we are moving towards a new monetary order, which is not a bad thing. Let's get back to a neutral reserve currency, neutral reserve asset. And if I'm the U.S., by the way, this episode is not supposed to be like, I'm American. I'm not going anywhere. I love this country. I'll fight to make this country great. America is one of the most naturally wealthy countries. Like, we have food here. We have oil here. We have resources. We've just never tasked ourselves to focus on production and proof of work and manufacture. Like, we've always had the easy way out, which is just printing money. And now we don't have the easy way out anymore. So just to be clear, I don't think moving to a new monetary order where something like Bitcoin is the world reserve asset, I don't think that's a bad thing. And that's not bad for America. I actually would love to see personal responsibility. I'd love to see the wealth gap shrink. I'd love to see a middle class again. I'd love to see personal responsibility be taken upon every single individual in this country. I'd love to see proof of work. I'd love to see local production. And that's fine. But I think whether purposeful messages were sent or not, the reality of the situation is like we're moving to something different because we have to. It's not like, let's not credit any politician or anyone for that reality. The reality is printing something out of thin air and giving it in exchange for real stuff is like not a thing. What do you think about the 70 to 110 day lag between liquidity and Bitcoin's price people are talking about? Yeah, I've seen it. Looks reasonable. I mean, Bitcoin generally, again, I think is correlated to liquidity. I think Bitcoin's the most accessible, liquid, freely tradable smoke alarm for fiat liquidity that us humans have access to today. The gold market is not that. The reality is, like, I think over half the supply of existing gold is owned by banks and governments. So Bitcoin is distributed and lives within the people. It's accessible. It's global. It's a truly free market, traded 24/7 everywhere on earth. And so I think it's the best smoke alarm for fiat liquidity. It leads the S&P down. It leads the S&P up, right? It's always the first mover. It, to me, is a truth machine in that way. So the 70 to 110 or this or that, I'm not a guy that's like drawing lines on charts and stuff. Not that that's a bad thing. That's just not me, right? Like, I'm a business builder. I'm an entrepreneur. I'm a leader of men and women that work for me. I'm not a chart line drawer, and I'm not overanalyzing, the day lag or lead that it has on liquidity necessarily. Although I've seen that idea and I don't necessarily disagree with it. That's just not my forte. Markets in Bitcoin. Does the euro and gold seem to be the safe haven for now? I currently don't see big moves towards Bitcoin. That might change, of course, but for now, is that analysis correct? I guess. I mean, I think, buying Bitcoin you're purchasing a monetary policy no one can change. You're purchasing a supply that is truly capped, and you're purchasing an idea. Like, the problem of saying I'll get into Bitcoin whenever Bitcoin starts catching a bid, you're going to miss the bid. Like, I forget the stat, but Bitcoin, I think, makes all of its yearly gains in like 9 days. So it's not like it goes up 2% a day. And like, once you realize like, oh, it's time to rotate into Bitcoin, you're going to wake up one day and Bitcoin will have gapped 20%. And you realize like, oh crap, Like I missed. So me personally, I buy into the monetary policy, into the finite supply, and the fact that there is no harder thing I can own, hard in reference to how hard it is to find more or produce more. And I think over time that will be accurately reflected in its market value. But I mean, to your point, like, Bitcoin's $1.6 trillion asset, gold's like 20. So, I mean, I don't think Bitcoin's accurately priced, and I don't want to speculate on when that will happen. I just want to be long all the time. Do you see another bottom in June? I don't like, I'm not speculating on the timing of market moves necessarily. I mean, for fun, but I don't want to be held to that. I don't know. I expect volatility. I think the direction of volatility over time will be up for sure. You know what I mean? But right now we're living in an environment where it depends like what Trump tweets and stuff. I mean, we're living in an extremely volatile market, and I've been trying to forewarn that. Like, to me, the next 2 to 3 months are just going to be volatile. That doesn't mean they're not going to go up. It doesn't mean they're not going to go down. It means they're not going to stay flat. I'd be shocked if like markets just didn't move at all and everyone went to the Hamptons this summer. I think there's going to be a lot of action, clearly. How do you feel about the Bitcoin ETF and buying Bitcoin through a Roth IRA so that you get tax-free gains? Is that an exception to always holding your keys? No, I mean, listen, guys. Back on the personal responsibility point, you get to use Bitcoin however you want. And that's the innovation, is that if you wanted to, you can use Bitcoin in a way that requires no one else outside of yourself. That is untrue for anything else in the world. If you want to use Bitcoin with a custodian, if you want to use Bitcoin in a tax advantage way, that's also your choice. It's not the notion that everyone needs to use it in a certain way. It's that anyone can use it in any way. That's the innovation and the point, is that no one can strip you of any rights to use Bitcoin how you want to use Bitcoin. So if you find something that is appealing to you, given your situation, then do it. Go for it. I mean, sometimes when people ask me like, should I be allocating this percentage of my this, or should I be positioned? I can tell you what I do, but I also, I don't have kids. I'm 31. Like, yeah, like my situation is probably a lot different than yours. So, definitely own your own situation. Own the risk reward and what you want out of your life. And the point that I want to convey is Bitcoin's the only thing that you can use any way you'd like, including using it in a way that only is reliant on yourself. It affords you that option where no other asset does. Okay, industry questions. If Satoshi's coins ever move, how would that change how you look and think about Bitcoin? Wouldn't change much. I'd be like, oh, holy shit, Satoshi's alive. That's crazy. I wouldn't care. I mean, Bitcoin's bigger than Satoshi now, and that was the whole point, and Satoshi intended for that. So wouldn't matter. And if someone wanted to dump 1 million coins on the market, that'd be great. That'd be a blessing. Like, let's be clear. Bitcoin is worth $1.6 trillion to humanity, not because someone hasn't dumped yet. Like, that's just how much humans value Bitcoin, the network, and this asset class. And so if someone dumped a bunch, surely we'd go down for some period of time, but we'd likely return right back to this and higher. So Bitcoin is worth what it's worth because it's bigger than any individual person. And it is the only truly distributed finite thing you can own and store your time and energy, your effort, your work, your labor. So it doesn't really matter. Sailor, Satoshi, blah, it doesn't matter. Sell if you want. I'll be a buyer down below. I'll buy the dips. Sell if you want. I don't give a shit. Do you have any resources for learning to run your own node? Yeah, of course I do. Do I have them like off the top of my head though? What is the best resource to run your own node? I think maybe Odell has some guides. Yeah. So I would go to Odell.xyz. That is ODELL.xyz. That is Matt Odell's website. And at least this is, what I used to point folks to. I can give an updated answer if this isn't the correct one next week. But Odell.xyz, that he has a guides link on his website, really easy to find. You click guides, and I'm looking now. There's guides of how to use certain wallets, how to store Bitcoin a certain way. I would assume there's a run a node on here. I love Matt, very close friend of mine, and I respect his work. And maybe that would be a good resource amongst many others. And maybe I'll make a point to next week to follow up on this one for you. How do you foresee the evolution of the Bitcoin Lightning Network over the next 5 years, particularly in terms of adoption, scalability, and integration with traditional financial systems? I mean, my kind of thesis on Lightning is it's a value transfer protocol, and that it allows instant cash final value transfer at relatively no cost. And no other value transfer protocol can say that. So Visa is a value transfer protocol. Swift is a value transfer protocol. Pound for pound, the Lightning Network is the premier best value transfer protocol in human history. Now, how accessible and usable is it? Like, how can us humans make use of that value today? Not really. It's harder. There's still like a lot of work to do to build these products in a way that makes them useful. So my expectation of the Lightning Network is we're going to continue to work on it and productize it and listen and iterate to feedback and try and find where within the market it solves the best and biggest problems, because that's the products people will be willing to pay for. And within that, then you'll get to reinvest and continue to grow. It's hard to grow something where people don't have like a really dire need or problem that they're looking to solve. So that's my kind of high level thesis. It's the best value transfer protocol in human history. And my vision and my hope is that it really like dematerializes things like Visa and MasterCard. It really opens up the ability for everyone to compete in value transfer, and that should drive costs down. That should drive accessibility up. That's my vision. Okay, strike related question. Now that USDT, also known as Tether, is available on the Lightning Network, will we eventually be able to hold/sell it on Strike? Sure, definitely. Eventually is the word there. Eventually, right now, Tether is available to our users not in the developed markets. So outside of the US, the UK, and Europe, we allow Tether in our product. And as the support for Tether on Lightning becomes ready, we will very likely integrate that. I mean, obviously, we're driven by customer demand and interest. So if our customers want it, we're going to do it. That's just the motto. So yeah, I would say eventually, though, is the right. I don't want to commit to any immediate. I can't say we're working on it right now. Will Strike ever come out with a debit and a credit card? That's another eventually. I think right now, our customers, a lot of our customers love the credit card they have. You're getting free Napa Valley wine. You're getting access to lounges in airports. You're getting 3% cash back. There's no real reason Strike would be better at credit cards than Amex. Amex has more money. They've been doing it longer. That's like a fiat product that requires relationships with Visa and all this stuff. Not to say we can't do it and we wouldn't be great at it, but I think there's a lot of other opportunities where we're uniquely positioned to solve like a Bitcoin native problem for you, like letting you take out a loan against your Bitcoin. I think what we've heard from our customers is my Amex actually is pretty good. Unless you can give me 5% cash back on everything, you're not really going to beat what these big banks and bigger folks are going to do for me. What you can do, though, is let me buy Bitcoin in an amazing way with the cheapest fees, and then let me borrow against it so that I don't ever have to sell my Bitcoin. That would be like the dream, because I'll tell you what Amex isn't going to do anytime soon is give me a loan against my Bitcoin. And so that's kind of why we've prioritized the things in which we have. We know that customers would love to do more of their finances with us, and we don't take that lightly. So, eventually we can absolutely offer that product. But I would say in the immediate, we're really focused on, what Bitcoin centric financial services are we uniquely capable of solving, because we understand Bitcoin and are better at Bitcoin than I think anyone else in the world. And we'll let some of the other fiat products come a bit later. Any future consideration for a different stablecoin usage other than Tron? Have you looked into other Nakamoto consensus proof of work such as Caspa? Don't really understand that question. And no, I don't know what Caspa is. Lending. When will you offer Bitcoin backed loans? What is the interest rate? The LTV? How is the Bitcoin stored, commingled, rehypothecated? Addresses made public to check. I will say we continue to roll out access to our Bitcoin lending product. So if you open Strike and you check, you might have access. Right now, I would say the way we roll out products is just we want the product quality to be amazing. We want support to be accessible. We would rather not rush things. And so we're focused right now on the American market first, and we have a minimum. And so we're very cautiously just rolling that out. So far, I mean, we have a decent sized lending book already, and I haven't even publicly announced anything. So it's very exciting, very cool. The product is great. And then as far as addresses made public, it's not part of the product today. It's just going to take us a little bit. I would say the Bitcoin lending market is newer than like buying and selling Bitcoin on and off ramps. And my dream and where I'd love our product to get to is where we have an address, you can go to it, you can see, all the Bitcoin that you're posted and borrowing against. And we will get there. And obviously, if that's something that you absolutely need, then, you can wait for us to get there. Some customers love the product that we have today. So I guess, I don't know, there's like 7 question marks in this question, which is awesome. But to answer all 7 of your questions in one concise little sentence is we're rolling the product now. Check your Strike app, see if you got it. I have not yet publicly announced it. We haven't started promoting or pushing it. It's just the way we roll out products. It's our preference of focusing on quality and being customer focused. And as far as, the properties of the product, yeah, we're going to continue to iterate and make it better. I think we'll have the best lending product in the industry throughout the course of this year, but it's kind of a one step at a time thing. The lending industry is definitely there's work to do in bettering the product versus something like our buy sell product we've been working on for years. The industry's had for a decade and is a bit more mature. Cool. I think that's the end of the questions, and I'm right at the top of the hour. Unbelievable. The universe works in mysterious ways. Okay, ladies and gentlemen. Well, I will say this. The last episode, you guys really enjoyed it. All the positive comments. I mean, there are negative ones too. I like them all. I like feedback. I'm here to kind of be a valuable part of this story that is Bitcoin. I'm not necessarily here to receive compliments or hate for that matter. It's all valuable to me, but I will say when you guys like it, it makes me all tingly inside. I love kind of learning the podcast game, figuring out the best, way to convey my thoughts to you all. I truly and genuinely enjoy it. So just thanks for being a listener, for engaging with me, for leaving a comment. I read them all. I try and take your feedback seriously, and I'm really enjoying the ride with you all. This is really cool. We've gotten a lot, even the folks on the podcast wave. Shout out to you guys that can't see my luscious thick beard. I see those numbers going up too. So this is a ton of fun. Boy, is it interesting time to be in financial markets and have this conversation with you guys once a week. So thank you for all the love and the support, and for all the hate and the feedback too. I value it all. And I'll talk to you guys next week. There's some really exciting stuff that I got on the horizon. Some really, really, really cool announcements that I can't wait to share. So we will be in touch. Put it to you that way. I've been cooking. Chef Mallers. All right, guys. Much love. Be safe out there. Stay humble. Stack sats. Touch grass. See the sun. Hug someone you love. Talk to you later.